Thanks for clicking. The Canadian Real Estate Association released its update for November's real estate market this morning, showing a continual drop in sales and prices. In addition to releasing November's sales data, CREA economist Sean Cathcart had an interview where he went over where the CREA expects the market to go in 2023. Indeed, as we'll see, while the CREA is providing an uncharacteristically negative outlook for the 2023 market, it's still relatively optimistic, especially compared with the facts on the ground.
If that's what he's going to hit us with, then I want to know what it is.
So what I want to do today is go over November's real estate data, take a look at the interview conducted with Sean Cathcart and the CREA's outlook for 2023, and then discuss what to look for next. This is the final CREA update for 2022, and as we'll see, Canada's real estate market has undergone a major shift since our peak in February. We'll continue to monitor Canada's real estate market throughout 2023. Click like and subscribe if you want to get those updates, but for now, let's get into this data. Onto the data. The average price of a home in Canada was down in November to $632,802, which was down about $12,000 from October's average house price of $644,600. This is a 12% decline in Canada's average price since this point in time last year, and an almost $200,000 decline in our average price since our peak in February. And Canada's benchmark price was also down in November. The benchmark price, that's the price of a home that represents the most popular set of features, the benchmark price in November was down to $744,000, down about $12,000 from October's $756,000 benchmark price. And the cause of these falling prices is clear when we look at the sales data. Sales were down from October 3.3%, but they were down 38.9% since this point in time last year. In summary, the average price down $12,000 from last month, but down almost $200,000 from our peak. The benchmark price down $12,000 from last month, and sales down 3.3% from last month, but almost 40% since last year. The 40% drop in sales since this point in time last year, and the nearly $200,000 drop since our peak in February, these are massive, massive drops. And it doesn't look like it's going to be getting any better anytime soon in 2023. As mentioned, the CREA's economist Sean Cathcart went over their predictions for the market for 2023. Looking to the recent 50 basis point rate hike on the part of the Bank of Canada, Cathcart said that the decrease in sales and prices probably isn't going to be getting better anytime soon.
And with the Bank of Canada hiking another 50 basis points just last week, I don't expect things to improve materially in any way anytime soon.
So the CREA is noting that while interest rates remain high, the outlook for the Canadian market isn't great. And this is a big shift from this point in time last month, when Cathcart was noting that the Canadian real estate correction may be winding up. After noting that the outlook for 2023 wasn't all that positive, Cathcart went on to say that the Bank of Canada is likely done or close to being done with its path of interest rate hikes.
Well, it's worth pointing out that those rate hikes are likely done at this point, or very close to being done, for what that's worth.
Give you $200.
However, this sentiment flies in the face in the data that we received yesterday from Federal Reserve Chairman Jerome Powell, who indicated that interest rates will have to rise further into 2023. And it's also a big divergence from what we heard from our own Bank of Canada Governor Tiff Macklem just a few days ago, when he noted that should inflation remain sticky, the Bank of Canada will have to raise interest rates into 2023. So we have the chairman of the U.S. Federal Reserve warning of higher interest rates, we have the governor of the Bank of Canada warning of higher interest rates, and we have the CREA saying that they're probably done or close to it.
What to do?
But, says Cathcart, when the Bank of Canada does decide to lower rates, after the rate hiking cycle is done and the inflation rate comes down and those rates get lower, the fundamentals are there for the Canadian real estate market to pop right back up.
The big question for the housing market is, when will those rates start to come back down? Because all the other fundamental factors needed for the housing market to take off again are still out there.
And this is very similar to the narrative that we've talked about before on this channel. The Bank of Canada raises rates, inflation comes down, rates follow, and we're back off to the races.
I want to drive a Range Rover.
We're back off to a major real estate bubble.
Other fundamental factors that drive the housing market are also super strong, except for interest rates, which are making it very difficult for people to borrow money and pass the stress test.
But Cathcart isn't really clear on what these fundamentals are. Is it a strong economy? because if it is, the only reason the Bank of Canada is lowering rates back down, if they do, but the main reason that the Bank of Canada would lower interest rates back down to those lows would be a recession. So if we're in a recession, that stronger fundamental is no longer present. Is he talking about Canada's supply problem? Because if so, as we've talked about on this channel, it's not clear in Canada that supply is any worse than it's been for the past 10 or 15 years. As we've talked about, it's those ultra low interest rates, ultra rock bottom zero interest rates that we saw during the pandemic that really caused that housing bubble. And it's not clear that those rates, even if the Bank of Canada does reverse course on interest rates late 2023, even if they reverse course, it's not clear that those ultra low global financial crisis, pandemic low interest rates are coming back anytime soon.
Anything is possible.
But like we said, Cathcart isn't clear as to what they think those fundamentals are. With all of that said, even Cathcart, even the CREA noted that all of this is going to be based on the inflation rate going into 2023, throughout 2023, maybe even 2024.
I think even the Bank of Canada would agree that they don't want to be the bad guy. And they don't want to hurt people's finances, but that's their mandate to control inflation. So look to inflation. The sooner it goes down, the better.
And I think the Bank of Canada has stressed this, the Federal Reserve has stressed this. We've talked about it at great length on this channel. No one can predict what is going to happen with the markets. No one can predict what is going to happen with interest rates until we know what the inflation rate is doing. There have been some positive signs for our inflation rate for 2023, mainly that oil prices are going down. But as we've talked about on this channel before, those are highly volatile and could swing at a drop of a hat. So, in summary, the average price of a home down 12K, the benchmark price down 12K, sales down 40% from last year. The CREA is acknowledging that 2023 isn't exactly a positive outlook, but is still offering some predictions that are far, far divorced from what our central banks are telling us. With all of that said, we will continue to have updates out on Canada's real estate market on this channel throughout 2023. Click like and subscribe if you want to get those updates. But for now, thanks so much for watching.